Well, hello again, traders, and welcome out. This is Ankit from Maverick Currencies here, and welcome to this currency recap for Monday, September the 19th. Let's take a quick rundown of the markets today and talk about what's really happened and where we need to position ourselves for the next 24 hours, and most importantly, follow our plan that we discussed in the currency room. So this week is a very heavy loaded week with a lot of news events, but that's starting to roll out starting mostly Wednesday. Outside of that, today was a bit of a mixed day. So we had a bit of a reversal from overnight losses. We closed at the highs of the day. So there was a bit of a change of that market sentiment during the day today. Nothing spectacular looking at the percentage changes. S&P was up 0.69%, but outside of that, small movement in the VT, crypto, gold, or even oil. So not a big percentage mover. The big move was really with that reversal that took place. So we actually had a almost a 1% down in the markets, and then we end up reversing a little bit today. So this again could be just a little small bounces that comes in between. The market's still bearish. We are still looking at a lot more further downside here, especially aiming for the June and July lows. But this week could be a charge by what the Fed or the FOMC rate decision comes out on Wednesday. And we'll probably see a bigger movement after that. But till then, market's likely to have some muted moves here. Seeing some lagging price action in the VT, in the World Stock Index. So overall, you can see that the markets are weak. But like any other markets, it doesn't go one way. We still get some bear rallies in between, or some pullbacks. So that's exactly what we're getting right now. Same thing in the crypto world. Getting a bit of a reversal over here on this candlestick. But again, if you look at it, this is a bit of a strong support that it did break and had a rally over here. So again, these are the markets where we could get some outsized moves. We could still get some powerful rallies in between, but you just have to realize what the overall direction is, and that would allow you to kind of pick the right time frame to trade that. So small reversals in between can be good short-term trades, but overall, if you're looking for a swing trading opportunity, I think the opportunity is still more towards the downside. So that's really where the markets are. And as far as our outlook goes, we're still sitting at a -2. We are below the 20, below the 50. These are just bear rallies that are happening here. But like we discussed in the currency room, the bigger movements likely to come off Wednesday after the Fed rate hike, but also the traders are more focused on what the Fed Chair Powell is going to say. How would the market react to it? How does the dollar respond to it? So those are the puzzles that we need to kind of see play out. So you can see the schedule is pretty busy. Today was not a day that we were planning to be active, and it's a good day not to be active. Tomorrow we have the CPI figures that will be starting out. And we can see that these figures, just like what we've seen inflation figures across the board, I think if this comes out below expectation, we'll have a bigger move, or it comes out way above expectation, we'll have a bigger move. So I'm actually looking at Canadian dollar tomorrow, but again, most of the big focus is on Wednesday and Thursday as we get the FOMC, the Bank of Japan, the Swiss Bank, and the Bank of England. So the second half this week is definitely going to be more interesting and market moving, and that's exactly where we want to be. So let's do a quick currency analysis and take a look at what the velocity is, so we can make sure that we're on the right side of this markets here. So if we take a look at the velocity scores, there's a lot in the middle, and one of the themes we notice here is that all the worst performing currencies are a +1 today. CAD was a -3 on a Friday, had a bit of a relief rally. Aussie, they had a rally. And pound, again, same thing. We're just seeing things shift over, which is, again, going back to those bear rallies. The thing that really stands out the most, I would say, is the euro. The euro is holding steady at a +2. So this is where I think we have to pay attention to euro and the dollar and some of the euro pairings, because we are now seeing euro stabilize a little bit more compared to how it has been in this downward slide for the past few months. Seeing a bit of a pause here. Outside of that, we had things that were +1 that kind of moved back to a -1. The yen kind of moved back a little bit. So outside of these two, again, I think the biggest mover really was the Kiwi. Kiwi stays weak, and we breaking down nice lows on the daily chart. So Kiwi is where we need to pay attention to as far as relative weakness goes. But as far as relative strength goes, I think we still have to figure out, outside of the euro, The dollar actually did pull back a little bit, but overall, I think dollar is still a bit of a play on Wednesday for the Fed. So we still have a lot to go through this week, and days like today is not really a date to respond, but mostly to be observant on the sideline and wait for how the market develops. So looking at looking at the percentage change today, as you can see in the cryptocurrency world, not a whole lot to discuss. Again, some getting some bounces in between, but overall the trend stays on the downside. So let's talk about currency. Again, I think this is where movement has been. So far you can see a day like today, the kiwi was really the outlier onto the downside, down 0.55%, but outside of that, really mediocre percentage change. I mean, the biggest move you can really have today was the Aussie Kiwi, but outside of that, or pound Kiwi or Euro Kiwi, but not really a whole lot of movement to be had in between. So again, not changing any sort of plan. I think we're pretty clear where we are this week. We're likely to respond to the market events as they unfold starting Wednesday. Most importantly, again, we'll be looking at CAD tomorrow. CAD is bouncing nicely off that 50-day moving average, but something we had to pay attention to if that pullback in the CAD is a buying opportunity or is that going to be a selling opportunity. But outside of that, the yen is still holding steady. We had the Bank of Japan this week. So all these currencies that has these central bank announcements likely to stay on the sideline until we get more information off that. And I think once those events are out of the way, we're likely to have better movements. So let's take a look at possible trades, take a look at some technical setups here, and then see what we can find as far as our technical setups goes. So one thing, let's just start with the dollar here. And one thing we can see that dollar has nice little resistance that it keep rejecting. We got these 3 wicks now off that resistance level. So if you're looking for a breakout in the dollar, I think that's the level on the dollar basket that you need to clear. But outside of that, again, if you take a look at an hourly to a 4-hour chart, we just pull back. We are in this little smaller range here. Not a whole lot that we can take away from this. We still have to figure out which way the dollar is going to go after the Fed, the FOMC on a Wednesday. So we'll have to wait and see. I think the dollar will be in play on Wednesday. But Canadian dollar is the one that we are paying attention to closely here. As you can see that on a daily chart, we did pull back below the 50. We're getting a little bounce over here, but at this point we have a failed breakout. We did pull back below that resistance. So as long as it stays below that resistance, I think we probably continue put some pressure on the downside. Pay attention to 4-hour charts, because on a 4-hour chart we want to see if these rallies are failing. But I think for now the CAD is in this rising moment here. But I'd like you to be more active on the CAD once we get the CPI tomorrow, especially if there's a bigger movement after that. So there's definitely pairs that we can pay attention to for the CAD. We're getting a nice little pullback in the dollar CAD, but as you can see, these are just pullbacks in this trend that we have seen. So breakouts, pulling back in the short term. So it's all about, do we wait for these pullbacks to kind of materialize, or do we play these little reversals? And again, this is where it goes back to your time frame, how long you want to hold a trade. I personally am more looking to be active around those news events, but outside of that, not really looking to play a whole lot of this price action. Dollar yen is really the big focus this week as well. As you can see, it's just holding steady. 145 is still a good level of resistance, and as a support, it's at a 142. Again, this will be a bigger mover once we get the Fed and Bank of Japan out of the way. But outside of that, I think a lot of the yen cross is kind of holding steady. You can see that Aussie yen did pull back and just stabilizing a little bit. Again, not a whole lot of information that we can take from today, because tomorrow we could totally see another upside down day. So one of the currency pairs to really pay attention to, or the pairing, is the Aussie Kiwi. I mean, look at that. On a daily chart, we are now breaking or touching that big resistance level. So you can see that we did pull back, a rally, pull back, and then a pretty big day today. So let's take a look at it from a longer time perspective and see what kind of movement can we expect. Because one thing we can see that this is a very important level of resistance. Going back 2014, 2015, 2016, 2017, and here we are 2022. So after 4 to 5 years, we are touching that level again. So big movements happen when these levels get cleared. So the question is, are we going to see this level clear in the next 24 to 48 hours? I'm paying close attention to this one, because if it does, the next level of resistance, so you can see, is quite high. I mean, we're talking about getting above that 116 level and I slowly, gradually get to 120. I mean, we haven't seen this level going back to 2013. That's when we had this high of 114.97. So the Aussie Kiwi is sitting at a very interesting level, and it's just telling us if this stays or breaks out, we want to be short the Kiwi. I think that's the play. And again, Aussie with the Kiwi negative correlation here, that would be a decent trade as well. So I'm really paying attention to here as just sitting at that level. It hasn't really broken out yet, but we'll have to kind of wait and see what happened this week. But once it clears that area, I definitely want to play this more onto the upside. But we'll have to kind of wait and see and wait for the confirmation. So Kiwi is the one that we can kind of, play things around. Let's say if the CPI figures tomorrow for the CAD is actually stronger and the CAD rallies, I really like Kiwi CAD on the short here. I mean, this thing, it continues to break lower, and breaking below this would again would be a decent trade as well. But Aussie Kiwi right now would be the play. For Canadian dollar tomorrow, we have good pairings for CAD strength. Let's say if the CAD weakens, I think the pairing that we can pay attention to right now that's working is EURCAD. I mean, you can see EURCAD has made a nice little reversal off this, and it's just hitting that resistance. Once it clears this level up of 132, we can get towards that 134, which is a very important level of resistance. As you can see previously, that had the support held in back in April, May, June, and then we broke in July. So 4 months, and then it broke lower. So I think this is where we can see this charge up higher. I think this is the level that we need to pay attention to, especially if the CAD is weaker tomorrow. So those are the pairs that we're looking at right now. Like I said, this week we're pretty clear when to be active and not to be active. And just going through a lot of charts is going to make us click buttons. And I think it's better to wait for that right opportunity, right timing, not looking to open any new trades overnight. If I have to take a trade, I'll be looking for an opportunity with the Canadian CPI tomorrow. But most importantly, waiting till Wednesday for the FOMC and the Bank of Japan. And I think that's what the fireworks going to be. So pay attention to that one and stay focused and stay patient. Thanks everyone for joining. We'll see you in the next update.